Assalamualaikum. Today our group, Team 1, will be presenting our analysis for ECB 30103 Strategic Management, focusing on Petronas and Unilever. So our team consists of 5 members. My name is Fairuz Nur Sofia, and I will briefly explain how Petronas can apply a market development strategy based on our analysis. First, the objective of a market development strategy is to introduce existing products and capabilities into new geographic markets. In this case, Petronas does not need to create new product. Instead, it leverages its strong expertise in LNG, gas trading and downstream energy services to enter a new country where it currently has no direct operations, while managing risk and supporting long-term growth. From step 1, our key insight is that Petronas already has a strong and diversified international presence, mainly in Asia, Australia and the Middle East. However, this concentration also creates geographic risk. We identified several countries where Petronas is not yet operating, which presents opportunities for geographic diversification, especially in LNG by importing and energy transition markets.
Okay, for step 2, several potential new countries were evaluated based on business environment, energy demand and strategic fit with Petronas. The analysis showed that Chile and Morocco offer relatively low risk opportunity due to their reliance on imported energy and openness to foreign investment. Namibia present high growth potential because of our recent oil and gas discovery, but it also involves high operational and regulatory risks. In contrast, Peru, Poland and Japan are less attractive due to political instability, strict regulation or market saturation. The key insight from the evaluation is that Petronas should prioritize market that balance energy demand, regulatory stability and element with its LNG and gas capabilities, rather than pursuing all opportunities equally. Okay, for step 3, Chile is selected as the strategic choice for Petronas market development strategy. Chile has a high dependence on imported LNG, which create a consistent demand for gas supply. This allows Petronas to enter the market by applying its existing LNG appetite without the need to introduce new product. In addition, Chile offers a stable political and regulatory environment and is open to foreign investment, which reduce entry risk and support long-term operation. From a strategic perspective, expansion into Chile provides strong value to Petronas. It fits well with Petronas' core LNG capabilities, support the company gas-led energy transition strategy, and enable revenue diversification and long-term growth beyond its existing regional market.
For section B, we analyze Petronas strategies between 2015 and 2017. During this period, Petronas faced a very challenging environment, especially due to the global oil price collapse. Firstly, Petronas adopted a cost leadership and cost reduction strategy. They reduced capital expenditure, delay non-essential projects, and improve operational efficiency to protect cash flow and remain financially sustainable. Secondly, Petronas implemented restructuring and retrenchment. This involved organization restructuring and workforce rationalization to reduce fixed costs and improve productivity, aligning the company with the new market reality. Thirdly, Petronas strengthened its international diversification by investing selectively in overseas assets with lower production costs and long-term growth potential. Petronas reduced its reliance on domestic revenue and managed oil price risk. Lastly, Petronas focused on long-term sustainability and energy transition. While maintaining its oil and gas core, the company placed greater emphasis on gas, petrochemical and cleaner energy solutions to prepare for future demand and stricter environmental regulation. Overall, Petronas adopted a defensive yet flexible strategy, allowing it to survive short-term industry shocks while remaining competitive in the long run. That's all from me. Thank you.
My name is Mohammad Imam bin On and I'll be presenting section C. I'll be analysing Unilever's portfolio using the BCG matrix. Unilever is a multinational consumer goods company with a wide range of products across different markets. To understand how these products perform, the portfolio is grouped into 4 main product segments, which are personal care, food, refreshments and home care. In this section, the BCG matrix is used to evaluate these segments based on market growth rate and relative market share in order to understand their strategic roles within the company. This slide shows the BCG matrix for Unilever's product portfolio. Stars act as the growth engine and require continued investment. Cash cows generate stable cash flow and fund growth in segments. Question marks require strategic decisions on whether or not to scale or limit exposure. Dogs have low growth and limited strategic value and are candidates for exit or minimal investment. Overall, the matrix explains how Unilever balances growth, stability and portfolio focus.
Thank you, Muhammad Iman. I'm Nurul Fatha. Now, let's move on to the Unilever's financial foundation. Their cash cows, consisting personal care, home care, and nutrition, generates around 73% of the total revenue. Well, despite a major 1 to 4% of growth rate, Unilever maintains dominant global leadership, which allows them to harvest consistent liquidity. Moving forward, this capital is channeled into the stores, specifically beauty and well-being. This segment is exceptionally efficient, which yield 39% of their total profit. Given that they are 12% high industry growth, their strategy here is one of the aggressive reinvestment to defend their market share against global competitors. However, the BCG figures shows a significant gap in the question marks, which includes plant-based foods and functional nutrition. It is peak at 20% industry growth, which is offset by a low of 0.3 relative market share, meaning these lines currently consume more cash than they generate, which Unilever should have either rapidly or exceed from the market. And finally, the dogs, which includes legacy tea and stagnant local brands. They face 5% market decline. However, according to the BCG logic, Unilever successfully divested the tea unit for 4.5 billion euros, in which the 2035 outlook should have been to be active in their portfolio management, which systematically remove all value that destroy assets, while the strategy is to achieve a linear high-margin organization which focus on their stars.
In conclusion, Petronas and Unilever illustrate effective strategic management in volatile global market. Petronas show resilient through geographic diversification and LNG market development in Chile, while adapting to crisis with cost leadership and renewable investment. Unilever demonstrate disciplined portfolio management via the BCG metric, balancing growth star, revenue generating cash cow, and high potential question mark. Both firms highlight the importance of leveraging core trends, rigorous market analysis, and sustainable innovation to remain competitive amid disruption such as energy transition and evolving consumer trends.